Hey everyone, how's it going? I got a great question today, so we'll start out with that. And the question was, because there's so much institutional money trading at the end of the day, is that a good time to put in day trades? So earlier this morning, I mentioned that professionals and institutional traders, they do a lot of their trading towards the end of the trading session. So an hour and a half to, or an hour before the trading session is where before the end of the trading sessions where we really see it ramp back up into the close. So is that a good time to do day trades? The answer is yeah, it can be an excellent time to do day trades because there's a lot of liquidity during that time. And since you have institutional traders who are trading and they have intentional trading, we can really get a trending market at that particular time. But that's not always the case. So let's take a look at today and see if that's what happens. So if we take a look at the S&P, what you see is today that was not the case. We had some actually from 11:30. We actually did trend a baby trend right here. Overall, it looks very much sideways, but we do trend upwards and then trend downwards. So the last hour and a half to hour is a great time to do day trading. If the S&P moves like this, then others will move like this as well. But what you want to make sure is, for sure, I would not do, if you're trading an option, I would highly, highly recommend against doing a 0 day to expiration, meaning expiring today option, or anything actually inside of 1 week. I would choose an expiration at least a week out if you're going to day trade, and you're going to day trade at the last hour to hour and a half. The reason is because time value really starts decaying like crazy. You're going to be fighting time decay like crazy, especially if you're out of the money. Then the entire value of your option can be destroyed. So whatever money you put in, you've got to be prepared to maybe it going to absolute zero. And so to mitigate against that risk, you would want to choose a expiration date at least a week out. So if we look at other days, like for example over here, you see there's a lot of volatility yesterday and directional movement that can make for some really great day trading. If we look over here, this was super directional into the end. And so the end of the last hour, generally, the most active and easiest, or I would say easiest, the quickest trades to develop in day trading are in the first hour and the last hour and a half. All right, so you see how wonderfully this trended on this day as well. So we might as well roll in and look at the day trade suggestions today. We look at Lulu. We just trended beautifully right off the bat. If you had gone in and seen this breakout right at the beginning, then and then we just go to your Hikinashi, you can see that we don't get 5 bars until over here. 1, 2, 3, 4, 5, right here. So you would have caught this half the initial leg upwards, which is about a third of the entire day's movement. And it would have been within the first hour, less than 1 hour, 45 or 50 minutes of the day, and you would have caught a huge move right there. If we look at Tesla, Tesla was really volatile, a huge move upwards and a huge move downwards. This type of action, when it moves so fast, that's difficult because you get these huge swings back and you might not get out in time. So when I see these giant bars right at the beginning, I might stay out and then let it settle down at their first half hour, maybe 1 hour. So you can see that after the first half hour, it settled down quite a bit. But this one broke out and just never came back, never hit any of these levels. So unless you have a different methodology, this wasn't a great one to day trade today. And then we look at Palantir. Palantir gave us a couple of opportunities here where we came up, touched this line and traded down. That was one opportunity. But the ones that you're more familiar with me talking about would just this one right here. We traded up when it broke out above this red line, then we came back to it, and then we broke back out. So your trading opportunity here was, let's find those Heikin Ashis. Was from right about here. 1, 2, 3, 4. Nope, that was interrupted by a green bar. So 1, 2, 3, 4, 5, right there. Okay, so more of a baby movement, baby trade, especially compared to the Lululemon, but still, that's a 17.24 to 17.35. So 10-cent move on $17, about 5% move, or 0.5. Let me make sure I'm not getting my decimal wrong. All right, so if I do 0.1 divided by 17, okay, yeah, 0.5, 0.6%. So we're looking at about 10-ish% gain right there. So a baby gain in Palantir. And then Pfizer. Yeah. Pfizer, similar to Lululemon, breaking out right at the beginning. And actually this line was up at the open. So this red line, by the time we opened, should have been up here. Okay, and we just broke out. And if we look at our Heikin Ashis, and say we would have got out 1, 2, 3, 4, 5 over here. So kind of a baby move over there in Pfizer as well. But more importantly, let's take a look at what's happened swing-wise. So the sectors that we wanted to pay attention to were XLU, and we can see XLU broke above that EMA 20. It did close above the EMA 20. That's great news. What we want to see now is that if tomorrow's low is also going to be above the EMA 20, that'll be a much more positive sign. And then we could say, okay, maybe we'll ride that wave up this week up until the MA 50. XLP, we wanted it to get above the EMA 8, and it certainly did. And so same thing. We want to see tomorrow the low above the EMA 8, and then we'll see if we can move up to the EMA 20 and then the MA 50. All right, and then energies. Energies doing great. So it kind of closed flat, but it's great. We're completely above that MA 50. If we see another day above that MA 50, we'll be a lot more assured that on a swing trade basis, this is a good place to be. So energy is looking like the best place so far. And then XLU, utilities, and staples are looking very promising. Let's look at what happened overall in the indices. So, we did move upwards. We stayed moving upwards. We did not break down below the EMA 20 or EMA 8. We didn't touch them, actually. So that's great news. So the thought that we might come downwards, that's sort of behind us now, and we're back to our predominant viewpoint this entire time was that we're going to be chopping between this EMA 20 and MA 50 for a while. And until we get a clear break one way or the other, it's just going to be really choppy, which is making swing trading very difficult unless you can capture a good trending sector, which XLE is, and UMP look like they may develop into. Look at QQQ. It is above the MA 50, which is great. So we did get back above that, but we really want to see it moving upwards directionally and not chop the same way that S&P is chopping. If we get that low above the MA 50 today or tomorrow, and then we start to get a series of higher lows, like 3 or 4 in a row, then we will be much more confident that we have more upside to go in the QQQ. All right. So really, a lot is going to depend on earnings. Like we said earlier this morning, there's a lot of earnings focus, a lot of companies reporting. So we can see there's a lot of ways to find earnings, but I like to use FinViz because it'll just list them all. I don't have to go flip through a calendar or anything like that. So if we go over here to screener, I can say earnings date, for example, this week. Make sure that I'm looking at US stocks. You can see there's 7 pages of them happening just this week. If I say, okay, well, what about how many of them are in the S&P 500? Well, there's 3 pages of those. So there's still quite a few that are occurring this week. So that is really going to dictate the movement of the S&P. If we see a lot of companies beating and have good forward-looking statements, then we're going to see some positivity, especially since the anticipation going into this round of earnings was that this would be the last quarter where we anticipated slow growth or negative growth. What's the market was anticipating is that we're going to start seeing increasing forward projections going forward. And if we see that, then that's going to be really positive news for the market. So I personally am more earnings focused rather than swing trade focused or trend focused or any of this. Right now, all of the opportunities are going to be in earnings. So learning how to trade earnings, having a good strategies or a handful of strategies to trade earnings is really great in this time period. And I already showed you my favorite. And I'll just show you a quick trade that I put on earlier today. Just as an example, you can see, let's see, I'm going to save trades right here. We did an earnings trade on Goldman. And you can see that if Goldman falls at any point, or as long as it stays below $20.50, is this correct? No. Where is my, let's see my break even. Oh, right, 327.19. As long as it stays below 327.19, then we're going to make money, and actually pretty good money, even if we go down at an extreme level, making $188 versus a 1562, that's almost 20%, maybe like 17, 18% for an overnight or even just to the end of the week trade. That's really good. And there's a potential of making 438. So 327.19 on Goldman is way up here. Let me just draw the line. Okay. You can see that it is in the middle of this jumble of moving averages right here. It's above the EMA 20, it's above the MA 150, it's above the MA 50, is very close to the MA 90. So there is a lot, there's a horizontal support or resistance right here. Okay, it itself is at an actual horizontal resistance. So we have multiple layers of resistance preventing Goldman from shooting above this level. So it's actually quite a safe trade. And then of course, if it just tanks from here, we have that guaranteed minimum. So this is the way that I like to play earnings. It's like, I don't have to pinpoint an exact place. I don't even have to pinpoint a great range. I can have huge room of being wrong and still make money. And that's how we stack the odds in our favor. So if you wanted a reminder of how that was done, is the exact same way I did it a few days ago. So if you go back and look at the earlier videos, you'll see how I constructed these are my favorite earnings trades. All right. So earnings focused, watch out if you are trading on your own and during this entire earnings period, you've got to, even if the company that you're not trading doesn't have earnings, you've got to be aware that there could be spillover effects. For example, Johnson & Johnson is also reporting either today after market or tomorrow after market. So we say, okay, well, let's avoid trading Johnson & Johnson because we don't know how this is going to go and it could swing all over the place. Well, anything that is similar to Johnson & Johnson or related inside the sector is going to swing with Johnson & Johnson's earnings announcements also, because people are going to anticipate that that company might have very similar types of earnings, which is reasonable if they're competitors. So if you want to see competitors or other stocks that might potentially be affected by a particular company's earnings, then you would go over here and look at competitors. I just saw it. There we go, competitors. So it makes sense that, for example, some of these drug companies, AstraZeneca, Eli Lilly, Novo Nordisk, they might swing up or down according to Johnson & Johnson's earnings. All right, so just be aware that just because the company you're trading doesn't have earnings, it doesn't mean that it might not swing up and down with it. All right. Okay, guys, that's it for today. Be careful, watch out for earnings and competitors of companies that are reporting earnings. And then I will see you tomorrow before market.